Welcome back. Well, yesterday we saw a large trade that took place on Home First Finance, and we had some big funds that came in there, but a couple of those Ps as well were sellers out there. To understand more about this deal and the way ahead, Mr. Manoj Viswanathan joins us on the show. Hi, sir. Morning. Thanks so much for joining in, and always good to see you in. Well, I'm looking at the shareholding. This fiscal so far, Bessemer, they went ahead and they sold that 8% odd. That was a bit of an overhang. That got cleaned up. Now we saw some selling yesterday, close to around 10% being sold between Warburg, Aether, as well as Through Not Fund. But these three funds, if you put it together, they still have roughly around 45-47% stake in the company. I think there'll be a cooling off for them, right? So for the next 6 months, we don't see any kind of selling coming from them. And have you got any communication about what they want to hold with this pending stake they have?
That is correct. If you see the deal structure, I think a 6-month lock-in has been provided. As we had communicated earlier, the thought process is that these exits for the private equity funds should be done in a very structured way. We are looking at a transaction, one transaction per year, kind of a thing for maybe next 5-6 years to give them an exit. So this transaction, you can take it as one of those transactions that we have been talking about. So we have done it in a very structured way. We have gotten some good investors, good long-term investors, and the lock-in also has been provided to kind of convey to the market that this will not happen very frequently, and it will happen probably once in a year.
Got it. All right. Got that. So that's out of the way then, Manoj. But let's focus on a couple of other aspects then with regard to business. Around 50%, I think, of your borrowing mix is coming from banks. If we look at PSU as well as private together. Will loans become costlier due to RBI's increase of risk-weightage assets for loans for banks?
If you see the tone of the RBI communication, I think it is largely focused towards the personal loans. I think their intention is to cool off the growth in the personal loans. We are a housing finance company with almost 87% of our AUM coming from pure housing loans, individual housing loans. So there is a very, very small portion that is non-housing. So at this point, if at all there is an impact, it should be the least for us because on both counts, first of all, they have excluded housing finance companies from the purview of this risk weight increase. And secondly, even if it is there, it will be only for the non-housing portfolio, so which is very small for us. It's about 13%. So as of now, our assessment is that if at all there is an impact, it will be the least for us across the ecosystem.
Okay, all right. Got that. Then just wanted to clear the air with regard to that. Manoj, also, when you joined us the last time around, I think you were talking about this growth, AUM growth of close to around 30% for the fiscal. That's on track. And also, if you could tell us, NIMs, I think you were guiding that will sustain at current levels of around 6%. Holding on to that guidance?
Absolutely. The growth is on track. We are very confident about achieving the growth targets that we have set forth for ourselves. And, we can see that housing demand in the country is very, very robust across the country. And we are very confident about the 30% growth. As far as NIMs are concerned, as of now, since there is a pause in the interest rates, the NIMs, we should be able to maintain the NIMs that we are at currently, which is around 6%. If the interest rates go up substantially from here, then of course there could be an impact. But as of now, it looks like there is going to be an extended pause. So we are, confident of maintaining the current NIMs.
Right. Manoj, good morning, Prashant here. That non-housing, which you said is about 13%, that is LAP, right?
That is loan against property.
We just had the Equitas management with us, and they were saying that portion perhaps will get impacted. They gave us some numbers in terms of the impact on capital adequacy. Would you have a similar kind of estimate on because of this, or you don't think?
Yeah. So if it is, so we are still waiting for clarification on whether housing finance companies as a whole are excluded or whether only the housing portfolio is excluded. If at all, we have to take a higher risk weightage on the non-housing portfolio. So that is 13% of our portfolio. So that should probably impact our capital adequacy by probably 1 or 2%. which is, because our capital adequacy currently stands at 45%. So, for a long time to come, it will not really make a change for us.
Okay, so 100 to 200 basis point impact on capital adequacy if that LAP portfolio is
Also
risk weights need to go up there, right? And this, it's 13% on assets or on disbursals?
13% of the AUM, and about maybe 14% on the disbursements.
Okay. Can you also give us a sense of which way asset quality is heading? What is the outlook for the next 1 year?
Asset quality is very, very stable. We are seeing very responsible behavior from customers. Generally, you will see that, during the season, I mean, festival season, there is a bit of an impact, but this time we saw fairly responsible behavior from customers. So, we are very, confident about the asset quality. It is likely to be stable, or, it can only improve from here on.
So, do you have any target in mind? I think your gross NPA ratio is about 1.7% by the end of this fiscal and next. Where would it stand at?
Broadly in that range is what we are looking at, because that is the stable NPA for our kind of a business. So 1.5 to 1.7% thereabouts is what we are basically looking at.
Okay. All right. Manoj, could you tell us with regard to strategy-wise, how are things moving? I think your AUM currently is around 8,500 crores. Say in the next few years, what is the strategy? Where do you see this AUM move? Point number one. And also geographically, how do you see this expansion taking place? Any key areas you're looking at? I think in the first half of the year, the last quarter, you've added roughly around 7-8 branches as well. So give us through that kind of an outlook for the next, say, 2-3 years.
Sure. Expansion of branches is not, our, key distribution strategy. Distribution, I mean, the branches mainly act as a hub and, for nearby areas. So more as administrative centers. So which is why you will see that even after 13 years in business, we have only 120 branches. Our focus is more on distribution expansion, which is appointing agents in the market who will refer loans to us, putting employees in various markets. Creating the whole valuer and the legal ecosystem that will be evaluating the properties. So that is our distribution strategy. As we have mentioned before, we are already present in 13 states in the country, and these 13 states actually account for 80% of the affordable housing demand in the country. And we will continue to, at least for the next 3 to 4 years, we will continue to focus on these 13 states. Our aim is to deepen the distribution in these 13 states so that we are, at some point, we can say that, yes, any customer, looking to take a housing loan in these 13 states will be able to access us, or we'll be able to be close to that customer. So that is really our aim in the next 3 to 5 years. So we are deepening distribution. The deepening of distribution started in the southern markets first, and then gradually now we are expanding into the northern markets as well.
You want to give us a number? Where do you see the AUM headed, say, in the next 3 years?
At a 30% growth, that is what we have committed. So in next 3 to 4 years, it should double. So we are at about 8,500. So we are targeting a 20,000 crore number by FY27.
Okay. Manoj, just to go back to that LAP portfolio, would you now sort of endeavor to bring it down? Would you slow down there?
No, if you see amongst housing finance companies in the market, our LAP portfolio is amongst the least. So we are not really targeting, or it is not one of our core products. We are not going after it. But customers do tend to come to us, because of our distribution presence in the market, history, etc. And we just accommodate them. So this ratio is likely to remain at these levels, 13, 14, 15%.
Within the housing segment, is it all salaried, or I mean, what percentage is non-salaried? Self-employed?
Salary to self-employed ratio is about 70-30. 70% are salaried, 30% are self-employed. That's the ratio currently.
And given what the RBI is saying, I mean, I understand it's not doesn't apply to housing loans, but but there's general sort of word of caution, etc., right? Which is to say that be careful and don't let your guard down in terms of risk assessment and other things. On the self-employed bit, is there any moderation at all, or you think not needed?
Housing, because I think RBI's focus again is mostly on the unsecured lending.
Correct.
I think they have been emphasizing the fact that, in fact, they have been differentiating between secured and unsecured in many of their statements. So in our case, 100% of our portfolio is secured. There is an asset at the back of it. And customers in this segment are generally very emotionally attached to the property. So I would say amongst, all asset classes, this would be the most secure.
Oh, absolutely, I agree. It is, but got it. Thanks very much, Manoj. Great speaking with you as always. And we continue to speak with you over the next couple of quarters and track what's happening. But for now, we'll leave it there. So that's Home First with a quick update on how things are looking.